Yo, what is up, everybody? Welcome to the channel. This is krabsfx. Today we're going to be doing some backtesting using ICT concepts, but this is a strategy by FBA Capital. That is my mentor right now. We're learning, we're backtesting, we're going to be tracking everything in here. So yeah, let's get it. We're using a Pip-Labs backtesting software for this. So if you guys want to check them out, I left the link to them in the description. That is my link in there, so if you guys want to help me out, check it out for yourselves. They do have a free trial. This backtesting software includes like live tick data, so basically it's like being in the live markets with like every second of movement in those candles. So yeah, let's get into it. We're going to be backtesting US30 today. Got our account here. We're going to be backtesting February 2023. So yeah, let's get it. Alright, so here we are. We're going to mark up our New York Stock Exchange open. Let's get the time right. New York. We'll be starting on February 1st here. And let's mark up 9 a.m. 9 a.m. right there. I'm going to skip to it right here. So yeah, with this backtesting, I'm really just trying to get better at using my strategy, the FBA Capital strategy. So yeah, let's get it. The first thing we're going to do is we're going to mark out the previous day right here. We're going to mark out right there. So this is yesterday's price action. Well, not yesterday, but like in data time the day before yesterday. So we're gonna mark out the previous day high right here. We're gonna mark the previous day high. We're also gonna do that with the low. The low right here. So we marked out the previous day high and the previous day low. So now we're gonna mark up the Asia session previous day low right here. This is the Asia session low. So we're gonna mark that Asia high / low. So yeah, right here we already see that price swept the Asia liquidity at 3 a.m. So I'm gonna keep that noted. Asia low swept at 3 a.m. So I'm gonna keep that in mind. So this liquidity from here has been grabbed. So let's see what our daily bias is. Bullish. So this liquidity was grabbed here, so it could make sense for upside movement in this session. So now what we're going to do is we're going to go on our daily, see if we have any fair value gaps or any gaps, any imbalances. So yeah, let's see. I do see we have one right here. We have a daily fair value gap that price might want to target. I'm going to mark that daily fair value gap. This is basically a location that price could be drawn to grab this daily liquidity up here before continuing down if it does want to make a move down. So yeah, we're going to keep that in mind. There are no major ones here. I mean, we do have this daily fair value gap that was filled right here, so we're not going to mark that up. So now we're going to hop on the 4-hour time frame, see if we have any gaps in price here. We also have a 4-hour fair value gap here. So this daily fair value gap is also a 4-hour fair value gap. So that's something that I'm going to mark too. So this is a pretty strong gap. If price wants to go up here, it's high probability that price could want to magnet up here. Basically draw up to here. So yeah, we're just going to keep that in mind for now. but we do have this 4-hour fair value gap down here, which price is pretty close to right now. So this is one that I'm gonna mark up because it is very close to price currently. It's about, let's see how many ticks, about 700 ticks away, or 700 points away. So price could want to target that, but yeah, let's see if we have anything else here. We have a 4-hour imbalance right here. We're gonna mark that 4-hour imbalance. Imbalance is basically just a fair value gap that is active with this candle. So this candle is still active right now. It's still moving because the candle is not closed yet. So it could want, price could want to go here and fill this gap right here. So yeah, we're gonna keep an eye out for this area here. If price wants to pop up, maybe to continue down, that could make sense. But yeah, now we're gonna hop on the 1-hour time frame. And basically what all this is, going from higher time frame to lower, it's basically just top-down analysis. I'm determining my bias for the session, and I'm marking up gaps in price from those higher time frames because those are pretty high probability gaps. So right here we're gonna mark up this 1-hour fair value gap. Right here, price could want to draw down to here and then reject and go up. So we're gonna watch that. Let's just make this top. Perfect. Let's see if we got any more. It looks like this 4-hour imbalance is also a 1-hour fair value gap. So we're gonna mark that. It's a pretty strong gap, pretty high probability gap. 1-hour fair value gap. Fair value gap. There we go. So yeah. Alright, now we're gonna hop on the 30, and what I'm doing now is just I'm aligning time with everything. I only get in the market at 9:30 and after. For this data, it's only 9:30 to 10:30 a.m. is the only time I'm going to be taking trades. So anything before and after that, these times I will not be taking, because these are the times that I will be watching the charts on the live markets like every day. So I'm basically trading one 1-hour candle. So yeah, let's just skip over to 9:30 a.m. Eastern time. Eastern Standard Time. So yeah, let's skip over 9 fast. Right when that 9:30 a.m. candle opens, it's when we're going to be watching the charts on the 1-hour time frame. Boom, right there. 9:30 a.m. price shoots down to fill this 1-hour fair value gap. That's going to be our entry right here. We're going to use about a 30-point stop here. Actually, this is a bit of a tight stop, so we might have a bit wider. Let's see. Yeah, we're going to run about a 50-point stop here just to play it safe. Let's put a 50 point, and we're going to be targeting 1,000 points for 1 to 2. So yeah, let's enter our trade right here on actual Pip-Labs itself. We're going to be risking 1%. So yeah, let's get it stops about 500. TP 1 to 2. Buy it, market, confirm. Boom, we're in. Alright, let's see how price reacts. We're going to be watching this on the 15 seconds. So this is what I mean by tick data. In Pip-Labs, you can see price move tick by tick to see how it's going to react. So yeah, let's just watch price, how it reacts at this level. A lot of other backtesting softwares do not have like tick data like this, where it moves tick by tick. so you can actually see how the candle moves like from like second to second. We almost hit our 101 here. We're about to go break even in a minute. Wait, let's see if we hit a 101 yet. Almost. So at a 101, we're going to be moving our stops to break even, just to reduce our risk and preserve capital. Oh, and something I didn't mention before, but something I saw before, the previous daily candle closed bullish, meaning that our bias for this session is bullish. That is something I did not mention before, so we're just gonna note that down right here. Our bias is bullish for this session, so we're mostly looking for longs. That's why I entered this long position. So I'm gonna put in daily closed bullish. And also what I'm gonna do, just while we're in this trade, I'm gonna write out my confirmations. And those confirmations were, first, our bias is bullish, so we're going with the trend. That's first. Second is time. We're taking this trade at a high probability time, 9:30 a.m. to 10:30 a.m. This is a high probability time. And then what did we have? We had a 1 hour and a 4 hour fair value gap fill. But just for this, we're gonna write 4 hour fair value gap fill. And then right away, right after getting in, we saw rejection. So we're gonna keep that noted. And yeah, let's see what price wants to do. We're almost at our 101. So let's just watch here closely. Boom, we hit our 101. Now we're gonna move stops to break even, reducing our risk. So now anything that happens, this is a risk-free trade. So now we're gonna play. So make sure our stops are here, break even, confirm. Let's see if we get hit break even or if we hit TP. Let's just watch now. Looking pretty good here. Oh, let's play this a bit faster. This is the best part about tick data. You gotta be patient. You can watch that candle activate live, or not activate. You can see the live candle. Oh, why is our TP up here? Hold up. And boom, TP hit 2%. Great trade. Basically, this was a simple 4 hour fair value gap fill at a high probability time of 9:30 a.m. Here, right here, you can see this is the 9:30 a.m. candle. So what price did is it filled in this gap in price. Boom, that's our entry right now. Look at that entry. That's a sniper entry. Let's see what we could have got if we held this maybe to the previous day's high, or to this Asia low, or to this 4 hour imbalance and 1 hour fair value gap. But we're already up 1,000 points, so this is where you'd want to close. You know, just call it a day at 2%. You don't want to get greedy, but right now I expect price to go up. Let's just watch here. I'm expecting price to fill this 4 hour imbalance slash 1 hour fair value gap. So yeah, let's see how price reacts here. Another good part of this strategy is that you can leave runners here. Like if I wanted to, I could have closed about 80, maybe even 90%, and then leave a runner to that 4 hour imbalance in the 1 hour fair value gap, which I would say is pretty high probability that price is going to want to reach for. mostly because of our daily bias here. Previous daily candle closed bullish. You know, we had this perfect rejection and fill off of the 1 hour and 4 hour fair value gap. So I would say it's pretty high probability that we're going to fill that 4 hour imbalance. But yeah, let's just watch. This is a pretty volatile candle here. But yeah, let's see if leaving runners would have been worth it here. Almost gonna hit break even. Still alive. Yeah, let's play this a bit faster. No top wick is a good sign of upside continuation. It could want to flip and continue up. Yeah, this would have been break even if you left any runners. So that's why closing out a 1 to 2 is always a good idea. This is 10 a.m. so this could have easily been 10:30. This could have been a news candle. Let's measure this. Yeah, this definitely could have been a news candle pushed down like that. 2,000 points or 200 pips, whatever you want to call it, with no top wick. That's high probability that that was a news candle. So yeah, that's why we want to get in and out of the market, secure our 1 to 2, and call it a day. So yeah, what I'm gonna do now is I'm just gonna screenshot this. We're gonna throw this into our journal. Rules followed, yes. Our entry time is 9:30 a.m. Our bias was bullish. We were long. Net P&L $2,000 / 2%. Points 1,000 points. 1,000 points. Stop loss size. We had a pretty big stop loss here just to play it safe because the stop loss of 30 points would have been a little bit tight. Would have gotten a better risk to reward, but I played it safe here with a looser stop loss below this 4 hour fair value gap. You know, it's better to have a loose stop loss here. I normally like a stop loss of 30 to 50 points at most. But yeah, 30 would have been tight, but it would have played out, given a nice 1 to 3.8. Maybe a 1 to 4 if I had a tighter. Yeah, it would have hit a 1 to 4 with the tighter stop, but that's all good because we want to preserve risk here. So yeah, setup. This was a fair value gap fill. Basically, what that means is price filled this 1 hour fair value gap here. This 3 candlestick pattern, it filled it. It also filled the 4 hour fair value gap. If we go here, it is just this 3 candlestick pattern in price right here that it filled. This is the imbalance here, and price basically went in, filled it here, grabbed all this liquidity sitting here in this fair value gap, and then pushed up. So yeah, this was honestly a perfect trade. Other than having a pretty loose stop loss, it was a great trade, but having a bigger stop loss on US30 is what I like personally, just because of how crazy the candles can get on here and how volatile US30 is. So yeah, it was definitely a good call to have that 50-point stop loss. But yeah, we're gonna finish up this log and say entry confirmations. We have those right here. We had our bias for the session. It was bullish. Why were we bullish? Because the previous daily candle closed bullish. Meaning if we have a bullish day yesterday, we're more likely to have a bullish day today. Like look at, if you go back in price on the daily, when you have a daily candle closure, the candle after is normally, or there's a high probability that it's also going to close bullish. It doesn't happen all the time, but look, bullish close after. We go back here, bullish close after. Previous daily closed bullish, boom, you got a bullish day after. The same goes for bearish. Say you have a bearish candle closure, for the day, you're expecting the next day to also close bearish and have potential for downside movement. So yeah, it doesn't happen every day. Like here we had a bullish candle closure, and here price didn't really want to push up all the way, but that's just going to happen. That's just probabilities. But basically what I'm trying to say is when you have the bullish candle closure, you're expecting your current day to also be bullish and give you a move up. So yeah, that's just based on probabilities. My bias was bullish, so this we're gonna add in our notes. Trade followed our bias. That's number one. And then we had time. This is the most important part of this FBA Capital strategy that I'm backtesting and I'm making these videos on. Time is the most important, because this time 9:30 a.m. to 10:30 a.m. is a high probability time. When you get fair value gap fills and false breakouts during this time, it's pretty high probability for them to play out. Like this is the only time I'll ever get into the market. 9:30 a.m. to 10:30 a.m. for entries is my favorite time. Anything later, I just know that it's lower probabilities for entries for my trade to play out, because during this time, that's when volume is the highest and orders make price move during this time. You saw how volatile that 9:30 a.m. candle was. It went straight, filled the gap, and shot up right away. So yeah. And then here we have, after time, our confirmation was the 4-hour fair value gap fill. We're gonna put 4 hour plus 1 hour. So that's double confirmation. That made this trade pretty high probability that we had a 1 hour fair value gap fill and then another 4 hour fair value gap fill. And we entered right on a little bit of rejection, which is the final confirmation. That's all this trade was. It's very simple. Secured at a 1 to 2. That's more than enough. If I had a tighter stop, which would have also played out, say you had a 30-point stop, you could have caught 1 to 3, 1 to 4 on this move easily. But yeah, I had a looser stop here just because this is US30, pretty volatile pair, so sometimes you can get faked out here. So yeah, that's pretty much it. Let me just throw this into the journal. And yeah, that's pretty much a breakdown of this backtest trade. If you guys want to see more breakdowns like this, make sure to subscribe, hit the like. And if you guys want to backtest yourselves, check out the description for this link. And if you guys want to check out this strategy I'm using and live trading with my team at FBA Capital, that's my mentor. That's who I trade with. He's the one who taught me this strategy. They do live trading. I think it's every day or 4 or 5 days a week. So yeah, check it out if you want. But I'm going to be breaking down more trades. So yeah, peace.